9th of March 2023 MAO held once again, guys. I really believe that the Federal Reserve really wants to sell the stock market down. I know that by saying this, it's like a broken recorder, and people have been saying that, you've been calling for this for the longest time, but things not happening. Now, you must understand the key point is that it is pretty clear that we are having all the signs of a potential recession. The only thing that's holding the market right now is the stock market. So if you ask me, right, the moment the stock market gives way, that is the starting point. And I'll explain to you more in detail why I believe so, because now, whatever I forecast about the Fed fund rate is actually happening right now. Disclaimer apply as usual, guys. Make sure you do a risk assessment, and thank you, AIMS, for the kind sponsorship. Now, before we go into all the technical fundamentals and business and stuff like that, I know you guys have been asking this for quite a while. Okay, I'm going to make this favor for you, okay? All right. Now, a lot of people have been asking me, alright, who is this 7th suspect in this Abby Choi case? And I told you guys, if you look at the mainstream media, you don't really get to see the name itself, okay? But of course, if you go deeper and really go beyond what the mainstream media cover, we all know that the 7th person, her name is actually called Irene, alright? So I'll tell you more in detail. Let's watch this video first, okay? This is the one that's official in the market. Let's take a look.
And was arrested in connection with the Abby Choi murder case. The 29-year-old Hong Kong woman allegedly helped Choi's ex-husband Alex Kwong, the primary suspect in this case, try to escape the city after the killing. She was the 3rd suspected accomplice arrested for assisting Kwong. The others included a man and a woman. One of them allegedly paid 300,000 Hong Kong dollars to help Kwong escape by sea, and the other was accused of helping Kwong evade the police. Choi, a 28-year-old socialite, went missing on February 21st. 3 days later, police found parts of her body inside a refrigerator. Choi's ex-husband and her former in-laws have been arrested in connection with the killing. Authorities are still searching for the rest of her remains.
Okay, alright, so you can see this. Alright. Okay, so the thing is that, of course, the mainstream media now, she's under suspect, so it's not very nice to actually release her name and or her pictures, but you can see on other places that even you do a Google search on Abby Choi, 7th suspect, you can only see Abby Choi, but you won't see anything related to the girl. Okay, so for me, it's alright, I dig deeper, and I realized that there's more than meets the eye, and of course, apparently now the pictures are surfacing out. Alright, her name's Irene, and of course she basically has a lot of connection with a lot of people. I can only divulge to that point. And very interestingly, she have a sister. No, not too sure is it her real sister, but when she put in this particular message, right, and I really like it a lot because it really has a lot of meaning behind it. And basically, it's just like a sister telling to another sister that, look, you don't screw up your life, okay? You only can learn it once, and sometimes itself, right, the society will really let you learn. And of course, and if the thing is, if it's going to be bad, it can be very, very bad. And to me, this statement itself is pretty clear that probably the sister is trying to warn Abby on certain thing. Warn the 7 suspects certain thing. And of course, if you actually want to know more about this itself, right, I can tell you this. Irene has a lot of pictures on Instagram, and she frequent Macau quite a fair bit. So why Macau? We all know that Macau is a very interesting place. So there's a lot of money involvement. So if you want to know more in detail, all I can tell you is this, guys. I will leave following these 2 YouTubers, I like them, but that's their views are a bit controversial. So I'm going to leave their links below it, alright, for just today's video because I don't get myself in trouble, right? Go ahead and listen to what they say, and of course, take a pinch of salt, okay? End of the day, you make your final decision, alright? Guys, I'm just going to share this only for today, and that's about it, okay? Alright, for those who have participated and left the words, the number 7 or 7, the digit 7, thank you so much. We have a lot of people coming in to leave your message in. I really appreciate that. Thank you once again. So guys, we're going to have the spin the wheel on this coming Saturday on 11th of March. And what time would that be? It's likely be in the afternoon. And once I spin it, there will be winners. Now, how many winners? I'm not too sure. I'm waiting for my sponsor to tell me how many people can I bring for the next lunch date. All right. But I think minimum is 3. Yeah. All right. So guys, I'll let you know more in details on the day itself. All right, let's recap what happened last night. As we can see, the Dow Jones is down by 58 points, the Nasdaq up by 63 points, and S&P 500 up by 5 points. Now, same thing again, I highlighted on Tesla. I said that Tesla will be down, and Tesla really came off. It's down by another 3% to 182. Later on, I'll show you the technical chart, all right? But across the board, Apple, Microsoft, Google, Amazon hardly move, but NVIDIA is doing very well. Now, NVIDIA, AMD, all doing well because now everybody's jumping into the AI bandwagon, and it seems to be like, if you don't go into AI, you must be a dumb-burst investor. So again, this is all the new things. Again, we saw it before in this blockchain, we saw it before in Bitcoin. So guys, I leave it to decide, yeah? Okay, so basically, traders consider a faster Fed tightening cycle, apparently. Well, because we have the data jobs showing that is less than expected, the job opening fell lesser than expected, all right? And a stronger than expected federal private payroll, which is the ADP, confirms it, all right, affirms it. So I was telling you guys that I believe that the ADP number will be higher, and it really happened. So now we have a problem here because that means that this coming Friday, which is tomorrow, the NFP figure might be higher because the market is actually looking at a lower number. You can see over here right now, right guys, this is really not a very good sign. The market last ADP was 119. They already revised it to 200,000, but the market came out 242,000. Now, what's the problem here? Why is the interest rate going up, but yet the employment keep on going higher? Now, you guys must understand this, guys. The thing is this, the global market now has started to reopen the door to let business come back again after the pandemic. So naturally, there'll be a huge demand of people, okay? But the thing is that you may say, but then isn't that good for the economy? Well, it's good, but the problem is that the pay is similar or even lower, plus the inflation is so much higher. So which means that, right, people may be coming back to work. It may increase the GDP of the economy, but the problem is that the expenditure minus cost, everything itself, right, is not able to come in as revenue. So that is the issue here. And if the thing is this, is more and more people get employed by the business, all right, because they want people don't mind going for a lower salary job just to get themselves paid so that they can cover their bills, then we have a problem, guys. That means that the spending power will be strong, and that will just maintain inflation, okay? So that's the reason why you can see that the job opening itself, right, continue to go higher, even though it's a good thing, but the thing is that the market don't buy it. So now tonight we have the initial jobless claim. If the number goes higher than 195, okay, fine. That means at least there's some unemployment going on. But if the number go like 185 instead, oh gosh, that means that we have a bigger problem. And of course, the non-farm payroll, don't forget the last time was 517,000. This time now they revised it to 205. I tell you this, if the number come out anything, let's say 300, okay, the market will sell again. So the only thing is this, I said, guys, I believe that the unemployment rate may go up to 3.6% because I feel that those who get laid off in December, in January, they'll likely be part of the numbers for February. So that's why I think this number will go up a little bit. Yeah. Okay. So the question is this right now, right? People are looking at 50 basis point already. Yes, indeed. I've been saying this. And when I said that as well, people actually commented and said, Kel, you're nuts, man. Whole market look at 25 basis point and you look at 50 basis point. You must be a crazy guy. But I think now it's proven for itself, right? So why the market is so volatile? Because these 24 hours option is really playing the market. You can see very clearly, right? The market was being sold down towards the last hour, and then suddenly within an hour or so, the market just pumped up all the way. Right? This is really incredible. The whole entire day, the market was not moving much. You can see that, not moving much at all. And then suddenly, it's all right. The option market just basically able to pump it up so strong, so hard. So that's why I say this, guy. This is really insane, and this is really basically making things very difficult for traders like us. Because why? It's like you have to stay all the night just to watch the market, and of course it's pretty tiring, guys. It's really tiring. But what to do? So with the option market, right? They did a calculation. If let's say one day the option market start to break down, how bad would that be? Well, JP Morgan says about 5%. That will create a 5% downdraft. All right. In the market. Now, if you ask me, it's 5%. I don't think so. I think maybe it's 5% on the day itself, but the whole impact can be as much as 15% of the stock market. Yeah, this is my personal view. What do you think about it? Now, Tesla, as I mentioned to you guys, I tell you that 210 is a good price to sell Tesla, and Tesla is actually coming down. That's good. Now the thing is, I still stand my view, 174 will be the support level for Tesla. And if Tesla comes to 174, maybe you can buy some Tesla to see whether it will rebound on technical ground. But from the space that I'm seeing right now, I think Tesla got a little bit more room to go. So if Tesla breaks 174, I believe that 143 will be a better buy. Yeah, and 143 should be about 50% to 61.8%. I think that is something better. Now, of course, if people are thinking, Kel, is there any number that you really want to buy? I say that if Tesla ever come down to $92, I'll buy a lot of Tesla. Right? This is how I see it for Tesla for this year. All right. Now the thing is this, that more and more big companies are having problem right now. Crypto-focused bank Silvergate is shutting operation. Now I covered this a month ago and I said that Silvergate is in trouble. Avoid buying the share. And of course, again, people ask me, how do I know all this information? I said, guys, I read a lot. I study the numbers. I think that it's pretty clear that this company will not be able to make it. And of course, now with this happening right now, JP Morgan is ending the banking relationship with Gemini. Now, why? Just Gemini couldn't produce their earnings. So basically, JP Morgan knows that something is wrong. Let's do it. Let's cut it off. And if you remember what Jerome Powell says in the testimony, he's already warning banks that to be very clear, be very precise, and very know what's happening on in the crypto space. If not, they get in trouble, right? So of course, I don't think the bank like JP Morgan want to get in trouble because of somebody else. So that is another problem that it should be having a bit of repercussion. And of course, we all know that Blackstone defaulted the 531 million euro this bond. So again, all these tells you that this is like very deja vu of what happened in 2007 and 2008. That was whereby you see companies having problem, and of course the authority says everything is fine, no problem, no issue. Then bang, in 2008 we saw the selling, and of course the selling was torrid. So that's the reason why right now you can see that the Fed terminals are all looking at least a 50 basis point right now. Very clear, more than 77% of people are looking at that. So again, that basically backed what I predicted 2 weeks ago. And of course the question is this, well, will we see 6%? Apparently yes. The open interest of the market right now, okay, source from Bloomberg, the market is actually pricing in a 50 basis point, and they are opening up that there could be a 6% plus. Oh gosh, that means that they could actually stretch to 6%. And that is what exactly I said about 3 weeks ago. Remember? 3 weeks ago, I said that, right, the Fed fund rate will see 6% by August 2023. And that was it, right? 2 weeks to be precise. And that's the reason, guys. So you see, all this information, if you actually look at MAO per day, you will net this so close to your heart, because I go and do all the research for you, and you just need to listen to me and benefit from there as well. So for guys who have been following me, congratulations on your bond trade. Keep doing well. Now, of course, the main thing is that we saw an incredible support on S&P 500 recently on the MA 200, and the moment it touches there itself, 3940, the market instantly rebounded and it went all the way up to the high of 4080 level. Okay, now 4100 is the resistance that we were talking about, and the market couldn't go above there, and of course it sold down. Now the thing is this, yesterday it broke below the 50-day moving average. It tried to recover, but failed, and last night the closing was just marginally below the 50-day moving average. So I'm going to tell you upfront, guys, when the market behaves so technically, right, that means it's so technical. That means that, very simple, if the market goes above 4,000 again, we're going to see the market going all the way back to 4080. But if the market fail, then the next downside will all the way definitely will be back to 3940. So if you ask me, right, the upside is 100 points, the downside 50 points. A lot of people say, okay, let's pick the one that is have a higher return, which is 100 points. Well, that is really depending if there's any fundamental reason to bring the S&P back to 4001. So unless we have a big stunner in the NFP, right, which is a positive one, then of course it will bring the S&P all the way up to 4100. But if the non-farm payroll really stun everybody and the numbers is actually higher than not, then of course, guys, we have a problem. We'll see 3940 traded again. Okay, so that's my view on this right now. And of course, you can see very clearly from Nick, right? Nick actually said this, and I like it a lot. Nick says this: Jerome Powell wouldn't have entertained a 50 basis point raise in March without intending to follow through with that outcome. So in short, it's what I'm trying to say is that, right, if Jerome Powell testified in the Congress and the way he said, it is very clear that he's looking at a 50 basis point. Alright, it's only the surprisingly weak data that will prevent the outcome. So Nick, as we all know, he's a direct mouthpiece of Jerome Powell today. So if he can write this, I can guarantee you that unless something happened in NFP, if not 50 basis point, it's a confirmed thing. And the market will be stunned by that, because even though we are pricing in, but a lot of people don't buy into it. So which means that if it's going to be a 50 basis point, the market will sell initially. Yeah. And of course, the US labor market surprise index, industrial sector surprise index, survey business cycle index surprise index. Alright, all these are telling you a very interesting thing is that while the soft survey data and the hard industrial data has notably disappointing since the start of the year, the labor market has shown no sign of weakness at all. So which means that, right, you can see the labor market is still going up relentlessly. Now this index usually will go in line with the industrial sector and the business cycle. So you can see that, right, all the way they are actually together. But January onwards, right, something just flipped. The labor market just keep on rising while the other two are coming off. This is a very huge gap, and I can tell you this, guys, once that means that the earning, the business is coming off, but the employment is high. So think about this, why suddenly there's no employment? Because company cannot employ anymore. The business will suffer even further, that's for sure. But the thing is this, the people who are now so-called employed, they'll find out unemployed, and there'll be a huge, issue here, and people may get very upset and things may get really out of hand. Yeah, so that is my view on this particular chart right now. So of course, the thing is this, what's going on viral is this one here, that it's a real quote, direct quote, and of course, this is where one of the official asked about Jerome Powell regarding about increasing interest rate. Would then it cause more problem because people will put people out of job? And of course, the joke is that including yours. Of course, this is not from Jerome Powell. It's an add-on. Yeah. Let me show you this video on this, and you will probably like it. Okay. Because the thing is this. The thing is, if we all know that Jerome Powell has to really increase interest rate, and that will definitely bring more people unemployed. But the thing is this, but to blame him is not his fault, because his job is just to balance the whole ship itself. So let's watch this very nice, interesting video. Then let's go.
Thank you, Mr. Chairman. So the Fed has raised interest rates 8 times over the last year in what has been the most extreme rate hike cycle in 40 years. The Fed's goal is to slow inflation, and your tool, raising interest rates, is designed to slow the economy and throw people out of work. So far, you haven't tipped the economy into recession, but you haven't brought inflation entirely under control either. And maybe the reason for that is that other things are also keeping prices high, things you can't fix with high interest rates, things like price gouging and supply chain kinks and a war in Ukraine. But you are determined to continue to raise interest rates, so I want to take a look at where you're headed. In December, the Fed released its projections on the state of the economy under your monetary policy plan. According to the Fed's own report, if you continue raising interest rates as you plan, unemployment will be 4.6% by the end of the year, more than a full point higher than it is today. Chair Powell, if you hit your projections, do you know how many people who are currently working, going about their lives, will lose their jobs?
I don't have that number in front of me. I will say it's not an intended consequence.
But it is, and it's in your report, and that would be about 2 million people who would lose their jobs. People who are working right now, making their mortgages. So, Chair Powell, if you could speak directly to the 2 million hardworking people who have decent jobs today, who you're planning to get fired over the next year, what would you say to them? How would you explain your view that they need to lose their jobs?
I would explain to people more broadly that inflation is extremely high, and it's hurting the working people of this country badly. All of them, not just 2 million of them, but all of them are suffering under high inflation, and we are taking the only measures we have to bring inflation down.
And Putting 2 million people out of work is just part of the cost, and they just have to bear it.
Well, will working people be better off if we just walk away from our jobs and inflation remains 5-6%?
Let me ask you about what happens if you do this. Since the end of World War II, there have been 12 times in which the unemployment rate has increased by 1 percentage point within 1 year, exactly what you're aiming to do right now. How many of those times did the U.S. economy avoid falling into a recession?
You know, it's not as black and white as very
Just
very
looking
infrequent.
at the numbers, it actually is pretty black
Alan
and white.
Blinder's written a book on this, and
There have been 12 times that we've seen a 1 point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right. So then the question.
So it's very clear that, right, every time when the Federal Reserve increase interest rates at a very fast rate, we will enter recession. Okay, and unemployment data will shoot up. We all know that, but the thing is this. Let me really ask this question: what do you expect the Fed to do? If the Fed don't do what they are supposed to do right now, they let inflation run wild, then there'll be more and more people suffering. Like you and me, our chai pen will cost $12, $15, $20. So sadly, but this is how it works, okay? Some people need to be released from their job, and that is to lower down everything. So, but the thing is this: when the companies and the people, when they enjoy, what did they think? Did they consider all this? They did not, right? So when we are buying all the luxury products because we have extra cash on our hand, did we even bother about this? We didn't too. So all I can say is, guys, this is going to be very clear. It's undeniable. We're going to see recession coming in, and definitely there'll be a lot of people losing their job. All right. So you really need to have something at your back to prepare, because if this is going to come, it's going to come pretty hard. And I like this answer. Oh no, I really like this question from Miss Water. And look at Jerome Powell. He can't answer this because he can't. He can't. Let me show you why he can't. All right, this is going to be very, very interesting. Watch this video. I prepared this for you. This is pretty cool. All right, let's go. Oops, sorry. Hey, my video is not shooting up. Hold on a minute. Okay, I think we have some video issue right now. Just give me a moment. All right, let's go.
Let me just go a little bit further. The chair mentioned that he had either written a letter or maybe even had some conversation from Janet Yellen about the time limits that she had attempted to describe. Is it your understanding that she said she could maneuver and kind of manipulate things so that she paid the bills that were coming due, but this could only last until about June? Is that your understanding?
Honestly, I would really have to not try to interpret the secretary's words for you. That's really up to her to do.
Can she keep us afloat until about June?
I don't, honestly. That's not for me to say. These are really questions for the secretary. I'm sorry.
Have you had any conversation with her about the statement that she made about being able to manipulate the debt and pay bills that were coming due out of another account, etc.? Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get
Gentlelady's time has expired. The gentlelady's time has expired.
Did I have equal time with you?
You sure did. He went over time.
If I did, thank you. I yield back.
Well, interestingly, you can hear this. Like, it's very, very clear that Jerome Powell refused to answer that question, because we all know the answer to that itself is that no. Okay? And that is the June period. Unless the Congress come in again and say, let's raise our interest rate, the debt ceiling. If not, right, we're going to run out of money. Okay? And that's why Miss Water is very, very clear with her asking, and very surprising, Mr. McHenry here just time out. Okay? All right, sometimes in life, you just have to accept all these things. Very interesting. Okay. All right, let's continue on this right now. Let's see how we go. All right. So the thing is this, guys. If you think that we're going to head into recession soon, and you think that you may lose your job because of whatever reason, then I think it's time to really get act clear. We're going to see a financial tsunami soon, in my opinion. I'm pretty confident in that, and I'll be pretty spot on with all my numbers, whether it's forecasting of interest rates and forecasting of the what will happen in the market. So I would like you to come in for a preview come market outlook this next Saturday on 18th of March 2023. It's via Zoom, okay? So 9:30 a.m. in your slumber, you can just wake up and listen to me for 2 hours. I will show you my view of the market, and I can tell you what you can do so that you can come on board to join the TWB community, all right? Now, this is going to be limited packs only to 120 packs because I just want really my targeted audience. I don't want everybody come in and then just waste my time. I just really want you guys to really come in and act on it because I believe that we're going to make some good money from here as well. And I'll go great detail to tell you how to do that. So my registration will start this evening, which is today on the 9th of March today. It will be on Trade with the Boys Facebook page. You just register. For my student itself, right, I got something extra for you. Pay attention to details when you put it into the announcement group. All right, guys? Okay, all right. That will be all for today. I'll see you on the technical side for today's market with TWB chart. Cheers, guys. Bye-bye.